Hello, chart watchers and Decision Point faithful. Welcome to this Monday, August 24th episode of Decision Point. I am your host, Erin Swenlin, and I am here with my father, Carl Swenlin. It's our job to prepare you for that week ahead. And I know we have a ton to cover right now, but before I get to the agenda, how's everything going with you, Dad? Did you enjoy the trading room this morning?
Yeah, that was fun, but too early for me.
Yeah, I know. It's a little early on the West Coast. That's true, even though it's noon Eastern. All right. Well, we had a great time in our trading room, and we are doing those now on Mondays for free. So if you are interested in joining us in our free trading room on Mondays, noon Eastern, all you need to do is go to our homepage at decisionpoint.com and sign up on our free email list. I will be sending out those registration links every week. And we have bubbles to talk about, not the kind that you get to just blow and play with your kids in the backyard. Net advanced declines, a lot of interesting information that we've been seeing there, and the chart will not disappoint today. We'll be talking about Apple, gold, and gold miners, of course. And then I'm going to concentrate today on the communications sector. That's kind of the sector I'm watching this week, if you will. And I did run a scan, and I have your diamond of the week. So I'll be going over that. So stick around at the end of the show and we can get that started. So yes, free trading room, live Mondays Eastern time. I just talked about it. Go to our website, decisionpoint.com, sign on up on it so you can get in on the action. All right, as far as the Decision Point scoreboards go, we did get, I will say that today we got a PMO buy signal on the S&P 500, and that was because we whipsawed into a sell signal last week. But it didn't last more than a day. So I'm just leaving this alone so that the S&P 500 is still on that buy. But last week on Thursday, we did get that buy signal for the NASDAQ 100. And of course, if you've seen those charts, technology, NASDAQ 100 still pointed straight up. Dow Industrials are the only, and the S&P still have red sell signals for the long-term monthly PMOs. So we're waiting for those to make their turn to the upside and get us those crossovers. Those, if we do have any right now on those charts, they won't be final until after the last trading day of the month. So keep an eye out on that DP alert and we'll let you know what's going on. Decision Point sector scoreboard, as you can see, mostly green. We were so close last Monday when we did our show to getting a buy signal on XLE. We almost wanted to just put it in this spreadsheet because it was just hundredths of a point away. And then, of course, the energy sector tanked, if you will. No pun intended. And so, you know, we still have that intermediate term trend model sell signal, which means that the 20-day EMA is below its 50-day EMA. And long-term trend model still has two sell signals here. That means that the 50-day EMA is below the 200-day EMA for both XLE and XLF. All right, but let's go ahead and get it started and look at some charts. I think I'm going to pass it right to you to get started, Dad. I know that you were going to talk a little bit about Apple. I think it all comes in with the bubbles we've been talking about. So I think we should just start there.
Okay, let's give it a try. This is something I wasn't planning to talk about, but it's come up all of a sudden. On my weekly wrap, I made a big deal. We had market prices going higher, and we were getting net advanced declines, negative and negative net advanced decline volume. And, that was just really showing a dearth of participation. That's a word I use a lot. What it means is how many stocks are participating in the advance or the decline. And so today it was redeemed. We have what looks like a upside um, climax.
Yes.
Yeah, upside initiation climax. I was trying to put the proper word. Okay, and so on both of those, we got it. We didn't get it on volume today. It's still below the 1 year daily average. So again, we got to look at, okay, is this for real, or is it are we getting faked out again? Right now, we just have to say this is a good looking signal. We even got an expansion of new highs in those here too. So yeah.
Yeah, not so bad. So a climax to the upside. Since we'd had all that negative, those negative numbers you were showing there, I know that was something that had both of us quite concerned. You know, if you have a rally day, the last thing you want to see is negative numbers on the net advanced declines. And we had that with 3-4 days. But yeah, we're seeing the numbers, they did come in this time. So it'll be interesting when we start looking at some of our other indicators.
Yeah, we're still waiting for these to update, and they're always late. They're way late in the process. So nothing we can do about that. But this was what I was concerned about. This is stocks, SP component stocks above their 20, 50, and 200 EMA. And you say we have really had prices moving higher, and we had these were just dropping off the cliff. And to me, that's really a concern, especially at this late in the rally. But here we go. Maybe it's.
Well, it'll be very interesting to see what those numbers look like. I will tell my DP subscribers, I will include this chart updated in tonight's DP alert. So you'll get to see those numbers right away.
Yeah, when I started out the trading room today, I said this rally is all about Apple, and it absolutely is. I'm trying to find the chart that I want, and that's not it. Parabolic. Featured this in my weekly wrap on Friday, and this is insane. It's not even parabolic. It's totally vertical.
Shouldn't I don't think that that's going to be that easy to sustain. I mean, certainly there's still some interesting news, you know, with the split coming up, the stock split. And I don't know, I've been hearing everybody wants to get in there right now before it splits, but it's vertical. And, you know, you've talked about this. We talked about it in the trading room this morning. With the parabolics, they generally don't end in a great way. And we know that Apple has had some serious pullbacks. Well, we looked at Tesla today, and it had, what did we find? Like an 80, you know, almost a 70, 80% decline before it took back off just this year.
Here's something that you don't notice parabolic on the log chart, but on a long-term view, you have to use log chart to get any sense out of previous prices. But yeah, you're really actually getting a curve on a log chart, which is pretty unusual. Yeah.
Yeah, and something to be aware of, at least Dad and I are proponents of, is that trend lines on log charts not particularly helpful because it's distorted. I mean, it's distorted on purpose so that we can see what's going on. I mean, support and resistance levels wouldn't change, but just be careful with your trend lines.
So with the Apple heading higher like this, I thought it would be useful to look at. We talked about the bubble in 2000, and we've got two charts here of. We've got one of Apple, and we have one of Microsoft. But just to see, this is here's the 2000 top, and even though Apple was a a totally solid company. It was not one of the .coms, and but it had an 83% decline after the
Sure.
top.
Yeah,
And
the
then,
.com bubble.
right, and then Microsoft, another one. That was a 70%. No, I'm sorry, 67% decline after the main top there. But so I don't know what's going to take them down again, and they will be going down again, and in my lifetime even, and as old as I am.
Happy birthday, by the way, from last Friday.
But I was looking at the split issue. Okay, yeah. One of the things about back in the day when you had splits, it's been so long since we had a lot of them, especially with the big stocks. But when you get a split, it's really a form of a way for the strong hands to distribute the stock into the weak hands. You have a stock that's worth price of $400, you split it 4 for 1, and it's now $100, and easier for the little money to get in, for the odd lotters, etc. And so I don't know if that's still the case, but here's an example. There's that 2000, it split 2 for 1 here, and ultimately, 70% decline. And here it's another 2 for 1. And that one picked the top. But it was very common when a stock split that it would have a decline shortly thereafter.
That's something we should probably consider this time around as well.
Exactly.
Mm-hmm.
Okay, where am I? Okay, I wanted to do some gold. Okay, Warren Buffett has always hated gold, and he bought recently. He bought 565 million of Barrick, which is a gold miner, and it happens to have the symbol of GOLD. And so I guess he likes gold now. But the thing is that this is not buying gold, it's buying a miner, it's buying a company that's producing something. And it actually looks like it pays dividends. And if there's a rally in price of gold, this stock will benefit from it. Obviously, he thinks it's a leader in that sector. But I wanted to talk about we have this correlation panel on the monthly gold chart, which is interesting. We see some cyclical movement on this, which is really odd. Normally, it should be, if gold and the dollar were inversely correlated, this should always be down here, but obviously it doesn't. In this case, while the gold was going up, and so was the dollar, which is unusual, but it does happen, as you can see. But now it's headed downward, and so that should be good for gold.
Yeah, and right now, with that,
the dollar stays weak.
Yeah, when you have that correlation, and right now it is heading down. Right now it's at 0, so they pretty much can go their own way. So yeah, gold is not going to be as tied to the dollar that way. So I love looking at that correlation.
Yeah, interesting. And then I did add another sentiment panel to the monthly gold chart. So I've talked about this before. The Central Fund of Canada is also a closed-end fund that has that sells at a premium or discount. And it differs in the size of the moves here because it's half and half, gold and silver in terms of dollar amount. So you get this is the premium and the extreme discounts has a lot to do with silver. But I wanted to have the history here so that we could see, these do move similarly, just not in such a magnitude. So we now have something to look at during this part of the move.
Should we take a look at gold miners?
Oh, yeah. You want to take it back?
Sure, I will grab it. All right, so let's go ahead and look at that gold miners chart. Okay, there we are. So I was really a cheerleader last week on Monday of gold and gold miners. And of course they pulled back, hey, can't have a good week every week. But at this point, we are still seeing that rising trend holding. So a lot of people have questioned me as to, well, what do you think of miners going forward? Is this a place to be or not? There are some mixed messages on the chart. I mean, I don't like seeing a rounded top like this, but I'm happy about this rising trend holding. There's still the 50-day EMA support level out there. And even past that 3750 level is there. My sense, honestly, I mean, I do own AUY right now. And, my sense that I'm going to hold it at this point. But, my line in the sand where I just give it up is capitulate, if you will, is going to be around that 3750 level, because if it can't hold these areas of support and it fails, then more than likely we're going to see a more lengthy decline. So you already have problems with the PMO right now. The one good thing is you still have some of these rising bottoms on these indicators where you have the stocks above their 20 and 50. But overall, they are starting to show some weakness again. But there is a fairly solid foundation because 100% of those miners have price above their 200, 100% of them are on golden crosses, if you will, the 50 being above the 200, and nearly 100% have their 20-day EMAs above their 50-day EMAs. So there's still some foundation there. That's why, if you're not in, I think this is really an opportunity, because then you can wait and watch and see what's going to happen at these levels, and then have that opportunity at that point to determine if it's going to be in a position to move back higher. But right now, I mean, I'm not expecting a huge breakdown, which is why I am still holding my gold miner. But that's me and my portfolio and my decisions that I'm making there. So that certainly is something to consider with the gold miners. Did you have anything else you might want to add to that?
No, just a remark about how similar the price pattern is to Barrick Gold, which we just looked at.
Yep.
So so it's probably pretty heavily weighted into that index.
Yes, more than likely. And it is interesting, like you said, everybody thought that gold is the problem, that, that Warren Buffett will not buy gold. And I think you made the great point. He's not actually buying gold per se. He is in the miners. And so, I mean, that also gives me a little bit of hope, if you will, that we're going to hold onto those support levels. So
buying a gold manufacturer.
That's right. All right. Okay, so wow, we're just moving really quickly through here. So I'm going to go ahead and let's look at, so we did look at these climactic indicators to open the program just a little bit. So I do want to kind of return to those. And I'm going to put a thumbnail on here because I know that I did get a question in the trading room and I was unable to answer it at the time, but they were asking about the VIX, what our thoughts are on the VIX. And, it's one of those indicators I do watch very closely. But, when we start to get this kind of a squeeze of the Bollinger Bands, I'm not so certain that the information we gather from it either puncturing the upside, puncturing the downside, being above or below its moving average, I'm not so certain that that's as useful, because we do have such a squeeze, and it won't take much for the VIX to drift one way or the other, above, below, And I feel that's what we're looking at right now. You know, the VIX has just been really oscillating right now, at least over the past few days, right in the middle of those Bollinger Bands.
Well,
What I
the squeeze indicates low volatility, and low volatility precedes high volatility. So we should be
exactly.
looking at something
Yep.
exciting pretty soon.
Yep, there's a squeeze. There's another squeeze. Certainly back here, this was, you know, through the March rally, we were getting a squeeze again, and then we got the big drop. So what I've found typically is that the squeeze happens before the decline, not generally through before a big move to the upside. So definitely something to keep in mind. I'm going to go ahead and look at XLC, and then I'll go into my diamond of the week. So this is the area of the market that I'm kind of paying close attention to, and I'm going to tell you why. Since we have a little time here, I'm going to show you where I go to find this info. So of course, there's the sector summary, so you can get a feel for where the money is rotating. But you can also do this for the industry groups and get a very good look at that by going to the industry summary. So not only am I seeing where the rotation is as far as the sectors, but then I can look inside and see which ones are the stronger ones and go from there. So this is intraday. But last week on Friday, I ran this and looked at the 1 week numbers. And to me, when I was on that sector summary for 1 week, we were seeing strength building in the comm services sector. So that's been a sector that I mentioned that we might want to watch going into this week. And of course, it is right there at the top. Let's see how we finished off the day. Mostly in the green here. The two areas I really had been looking to concentrate on were internet and mobile telecom, but I am finding some interesting places other than there. But I'm going to show you my diamonds after we look at this XLC chart. So very similar look to what we were looking at as far as the GDX. You know, we have all of our indicators below to give us a sense of where that sector is, what the strength is underneath the surface. And right now, we do have that rising wedge. That is a bearish pattern. So we do have to keep an eye on that particular item, but we are in a nice rising trend so far. I like that we're seeing that move to the upside on the PMO. We have rising bottoms that are confirming the current rally with price bottoms. We've got, you know, a pretty healthy amount of stocks within the comm sector there that we've got almost 85% that have their 20-day EMAs above their 50-day EMAs. BPI, mostly flat. Percent stocks, you can see rising bottoms again here. This is a little less exciting, I have to say, seeing that declining tops on the percent of stocks above their 50-day EMA. So that'll be something to watch. But I'm liking what's going on under the surface mostly. RSI is getting overbought here. It is over 70, but I think that is, you know, part of it is just getting the price range has been moving up very quickly with this rally. So I went in and I did my diamond PMO scan, and I actually came up with two possible diamonds of the week. And the one that I actually liked the best, and this was in the internet section, I like the setup here on netease.com, NTES. So this is the one I decided to make my diamond of the week. The other one I will divulge to my diamond subscribers tomorrow. So if you're interested in that, but I thought that this one certainly looked good to talk about. We've got that nice cup shape going on here, which I like to see. Prices stayed recently above that 20-day EMA. We didn't have to go down and test the 50 here on all of these. I like the way that the PMO is turned up. It's very, very close to a buy signal, well above the zero line, so that's great. Rising bottoms right now on the OBV. I have to say the one thing that we do like to look for that we don't quite have now is that we did get this big spike to the upside. And, you know, while we did get some great volume that's coming in here, usually when you get a price breakout, you do want to see the OBV breakout from its previous top. So we got the breakout from this top back here. Yet you can see that the OBV hasn't really overcome that particular top. So that's something to watch. But overall, I think that the chart is looking pretty good. You know, you've got the RSI is in positive territory. And at this point, we just are looking at that 500 range as overhead resistance. If we take a look at that weekly chart.
You know, I think the idea of the cup, I'm not so sure it's a bottom formation.
Right. And I should have said that because yeah, those are typically reversal patterns. But I am seeing the fact that, you know, we had that pullback and we're starting to come right back out of it. But very good point. I do the same thing with head and shoulders and reverse head and shoulders. A lot of people will say, hey, there's a head and shoulders. And I'm like, well, yes, but it's at a bottom, and that's head and shoulders are reversal patterns. So very similarly, rounded bottom or a cup shape is generally a reversal pattern, and you should look for it at the end. But I think it's Mary Ellen who talks about a basing pattern. I guess that would be more of a basing type pattern. It's situated for the breakout. There's a couple of different ways to look at it. All right, we have about a minute and a half. So I'm pulling up the weekly chart so we can look at that. Of course, you know, these straight up rallies are always interesting. But what I have to say is, you know, when I look at this and we came down and we had that, you know, the COVID crash, it did take price down quite a bit, but it hit this area of support, you know, at about 275, and it really hasn't stopped moving higher, except to consolidate a little bit along the way. And the PMO is still rising. It is getting a little overbought, I would have to say, based on history, but it moves very slowly. We'll have to see what happens. But at this point, I do like the fact that it is pointing in the right direction on the weekly chart. And typically that's why I will do not only a daily chart, but I will include the weekly chart in my diamond reports as well. So let's see, we have a few more minutes. I'm going to go back here to, I want to show everybody the sector rotation going on right now since we have just a minute left here. Sector rotation, where are you? Sector summary. I love to use Julius de Kempener's RRG. It gives me a really good idea about sector rotation. You can see where the strength is, where it's going to go. And at this point, let's see, XLK, you can see is starting to show improvement. XLC in the intermediate to longer term is weakening. But like I said, in the very short term, it's one of the sectors that I will be watching at this point. All right, that does it for the DecisionPoint.com show. And I hope you enjoyed it. We hope you'll join us next week on Monday. Happy trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.